How's it going, everybody? Matt Diamond with Kalshi, and today we're going to talk about how to trade around a major economic event. And there was a highly anticipated one today. It was the CPI report. And that's what Kalshi is all about. Those event contracts, right? Taking advantage of the volatility in the market when these major economic events are announced. And today you had that inflation report and a really good website to go see whether or not there's going to be a major economic event on the calendar is going to be forexfactory.com. The URL is the top right here. And this just shows the calendar in which there's going to be some major announcements on the day. It's always good to check this going into the trading day. So today is August 10th. It's Thursday. And you can see right here, the core CPI month over month, the CPI month over month, and the CPI year over year, just basically meaning the inflation reports. And the reason they're in red is because it was a major announcement. And the July CPI report showed that inflation rose 3.2%, which was actually less than expected. So the consumer price index, or that CPI, it rose 3.2% from a year ago in July, slightly below expectations. The core CPI ran at a 12-month rate of 4.7, also below the estimate. Both measures were up 0.2% on the month. So that's what it ended up being. But obviously, everybody has an opinion on what it can be prior to that report. And I just want to go over how you could have expressed that opinion on Kalshi. And there are numerous different strategies in which you can do that. But today we're going to focus on the S&P 500. So this is the daily chart to the left, and to the right, this is a 15-minute chart, just to break things down in a little bit more technical fashion. So let's keep things very simple. We know that going into this report, there was a bit of a sideways consolidation. The market hadn't really chosen a direction, pulled back a little bit, but the last handful of trading days, it was in a sideways channel. It was in a range. So let's just keep it extremely simple. This is where we use some technical analysis. The upside of that range was right around 40.60. Looking at the 15-minute chart, this is where that high was. And then looking at the low, 44.80. So it's stuck in the middle of a range. And we have a major economic report. And we know that there can be a lot of volatility on those days. So there can be a few things that happen. There's a big move to the upside. It breaks out of that range. There's a big move to the downside, and it breaks down out of that range, or it happens to continue to stay in that range and trade sideways. So now looking at the S&P 500 daily bracket ranges, and remember what I said before, that upper range is 45.60. So we're going to go to the 45.50 to the 45.75, even the 45.75 or above, but obviously don't want to go too far above that. And let's say we believe that the market is going to have a positive reaction because the CPI is going to be a positive report and the market has a bullish move to the upside. The way that I can express my opinion being bullish is that these upper ranges, the 45.50 to 45.75 and the 45.75 or above, I would want to trade the yes contracts, because if I believe that it's going to break out of that range and there is going to be a bullish move to the upside, there is a likelihood that it closes in these upper ranges. So that's the thesis for the move to the upside and positive news. Let's say we have a different theory. We believe that it's going to be negative and there's going to be a move to the downside, a bearish move. So remember what I said before, kind of the lower range around that 44.80. So we're thinking that potentially it could break the lower end of that range if the news is bad. This is how we can structure that trade. So right around that 44.75 to 4,500, even a little bit lower, 44.50 to 44.75. So these ranges right here, what we would want to do is, if we're believing that it's going to go to the downside, have a negative reaction and sell off, we're going to want to trade the yes shares on these lower ranges, because if that's the actual case and it has that move to the downside, there's the likelihood that it's going to close in these lower ranges. So that's the theory for the downside. So right now we've done the potential breakout to the upside, the potential breakdown to the downside. Now I want to do one if we believe that it's going to continue to stay in that range and it's not going to move out of it regardless of what the news is. And this is going to be a similar strategy to being an options seller. You do not believe there's going to be a breakout and you don't believe there's going to be a breakdown. So as far as the upper portion of that range, that 45.60, let's say that regardless of what the news is, our belief is that it's going to continue to stay in that range. What we would want to do is go to that area, or go to that range, the 45.50 to the 45.75 or the 45.75 or above. And if we believe it's going to continue to stay in that range, so we'd want to trade these no shares because we do not believe that it's going to close or trade in these upper ranges. So that was the setup or the strategy for the upper portion of the range. Now let's focus on the lower portion of the range. So I mentioned that lower part right around 44.80. That's the level to the downside. And we think it's going to continue to stay in that range. So what we would want to do is go close to that number, 44.50 to 44.75, or even a couple of the ranges below. Don't want to go too far below, but the 44.25 to the 44.50, or even kind of far out, but I think it's still okay, the 4,400 to the 44.25. So once again, we still believe that it's going to remain in that range and it's not going to break out regardless of what that information or that report is going to be. What we would want to do is trade the no shares to the downside of those ranges because we have a belief that it's not going to get there and it won't close in these areas. And this specific situation or setup where you're trading those no shares, that's much more like being an option seller and anticipating where it won't go versus trying to figure out where it's going to go. And remember, nobody knows what's going to happen, but that's why we do a really good job of trying to express our opinion and have a strategy on how to do it. And these were some really good examples on how to do that on Kalshi. So that was the video. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.